S&P 500, a weekly index, S&P 500, 2008 period. We're coming right back over here in time. And our targets are 1425 on the S&P is right over here. And that happened on 5/11 of 2008. We remember it like yesterday. This is where they're pushing this S&P. And these were our yearly targets a year ago, even so. And the way that the bull is running is you're 97% overbought. So nobody says that you can't get up here to these resistance levels. In a high frequency model, you can push it there, believe me. And that's a different subject and a different topic. But we're going to take a look at how we got to the 1400 level that we talked about a week ago. We got now, that's 1409, 1410 handle is going to be this whole area back in this time frame in 2008. And what did 2008 look like? We were there every day. Here's what it looks like. I'm just going to show you this piece of it. And these are the April period where they got it super high up there, and then that was the final. However, these are the upper resistance levels that I'm showing you where the current market is. S&P closed at 1404.17. Now, having said that, we are hitting our key levels and we're extremely overbought. But please be aware, everyone, that you are. And I want you to know that before we see 1440 up here at the high, we're probably going to have to do what? Come down, because you can stay in overbought cycles for a number of weeks. It was 1 week ago that we updated a topping 2 week to 4 week topping pattern, just to give you the update from last week's analysis. Is that we've used one of those weeks. So now it's a question of 1 to 3 weeks left. Topping patterns can go through their phases of pullbacks and testing resistance levels. However, it's always my belief that the upper end of the resistance levels are right here in these weekly bars that go back in May and June. Here, going right here in that calendar month. Look at this May part. And it's weekly. And it's nice for you to know where you're at and how we have hit our upper end of our target in the short term. And now the upper end of it would be where you can come right up into these channels. This is 1409. Okay. I'm not going to, we'll use our own platform. I'm just using this so that you can see these peaks, but how they peaked before they had their final reversal. This was a blow off top up here back in 2008. And so the thing about it is, this is where the resistance level up here at this 1420 handle is going to be, and it's going to come up in this frame. If you can see my cursor on the S&P, it'll come right up to the high end of that weekly bar. You'll have a percent level that it doesn't quite see. The problem is it's 97.23% overbought. And as I said, those were the highs over here that we had put in back then, and we had shorted that thing all the way down. Oh, yes, we did. We've been around a long time. And topping patterns have volatility to them in weekly patterns. As you can see back over here, this was in the 2008 period where the S&P was way back up here. The bull is trying to build that story, but you know, as far as the S&P goes, every state in the union is going to be raising taxes. Food inflation's at 5%. Right now, commodities are going higher in that inflationary cost. Gasoline, once again, the key elements that get down to that consumer. And we all know as consumers, you know, these are big things that lay over us. However, these were the 2007 periods. And there's that 1460. But even when you get down over here in the 2007 weekly lows over here on 8/12 of 2007, I was right there. Bam. And there it was. and it hits that, and it came right up and puts that blow off top. These are what bull tops look like. And so you have a reference of the weekly bull tops, SMF MMTs. Not only that, when I go back over here, and I'm going to get back into the zoom tool for you, I'm going to take this little piece right there so you can see it. And I'm going to clear the trend lines for you. And I just want you to know one thing to be clear on is as I draw this peak, that is 1440. That peak there in the 2008 reversal, weekly reversal, double weekly reversal here back in this period of time, which was on 6/1/2008. Take a look at the weekly movement here. Now, no one says, and there's that 1411, 1410 that we talk about, and there's that crown right up there. That's our upper second tier target. It's totally right up here at that 1425 handle. But just remember, you would be so overbought on the weekly level that you would be looking for at least a $70 pullback from wherever that bull exuberance hits that key wall of resistance and seasonality, time of the year, everything else. Yes, the bull's got a lot going for it, but listen, a lot of things don't add up. So what? What does matter, though, is how overbought, and then because it's so strong anyway, because of it, is that the pullbacks are going to be viable. However, in the shorter term, you got to take a look at this year. I just want you to see that this is straight up parabolically going right into some very challenging periods in April and May for the markets. And if you are an innocent investor, you know, you may want to, I don't know if you're going to put it this way, you may want to think. So start thinking. Now, it's not abnormal for this S&P to go right up here in these key resistance levels. However, your overbought will be looking at where that wall of resistance hits. Here's the weekly breakout, and part of this last weekly breakout, I want you to know that it opened at 1370 on the weekly level. It made that high of 1405.88, right up there where we talked about it 1 week ago in our analysis. Now, the low was 1366, and they closed it at 1404.17. Now, the 20-week moving average is at 1294. Let us not forget that. The MA 200-week is at 1132.97. I would also like to let you know that, just for the record, 1274.48 is the 50-week. The 100-week moving average in ours on this is about 1229.67, and we had 39 handles that moved up. The prior week it was 34 handles, and we're reaching that overbought process up here, MMTs. Now, in the SMF new alert service that you'll actually, you know, this is what we take our apprenticeship MMTs. And this is what they're going to learn. And they've learned it right all the way up into this price exhaustion area. And one of the things I would like for them to take down to note is that you have a 97.23% DS overbought. Okay? And I will be updating the SMF formulas. And the thing of it is 1347.99 is that rising blue line, that 10-week moving average, where it was just a very, look at the percent right above it as it was climbing. You got this last weekly breakout and a monthly options expiration on the S&P. MMTs, you will be fully aware, the people that are in the apprenticeship program, how we're going to trade those opening bell short exhaustion gaps based on the S&P being fully valued within a 3-month calendar year movement. We've gone too far, too fast, and broader equities that are up here that are just as overbought, they too, just like Apple had to. They finally got it to 600 and they pulled the plug. Okay, and you had to have the pullback. So these bull rallies have to have their weekly pullbacks within the actual 3-month bull rally process. There's no doom and gloom, and we're not saying anything is bad, but listen, each side, who cares what side the bull case is, or who cares what the damn bear case is? Only thing we care about right now is that it's getting overbought and it's time to take profits and look at the other side of that market. And these are the key resistance levels that we're going to come up to right here. And there's other areas in between here, but we will take a look and see where that top finally ends in the bull cycle and has to pull back like any bull cycle market does. The lesson learned for the apprenticeships and other people on the alert services and people that are involved in one-on-one counseling with markets, different price channel zones, is that we are running up there now, and a lot of the easy money's been made in the S&P 500 index, and the earnings in April are going to be coming. Just remember that from the base of the bottom to this area, this is an extension breakout from these narrow range tops that we talk about. You don't like narrow range tops like this can work two ways. One, you could have had the very opposite and you would have had the big red bar down here to support levels again. And you would have came down and tested this lower end of the S&P 1320, 1315, 1320 area and then went back up. However, this is a weekly breakout, exhaustion weekly breakout on the S&P 500. Individual S&P 500 stocks that meet the same overbought process, we will make a list of the most overbought S&P 500 stocks, and we'll look at where those pullbacks come into play, and we'll actually buy puts that are deflated, and we'll make money because we know how to work the market in this case. S&P 500 weekly bullish breakout update, price exhaustion reversals within 1 to 3 weeks left in the time frame of bull top exhaustion patterns.